Guys, if your mortgage broker recommends you to do this, please consider it. When you apply for a home loan through a mortgage broker or any lender at all, there is some point in the application when they ask you, do you want to speak to a financial planner to review your insurances? Now for me, I have to do it for compliance reasons, so I pay for the initial consultation for my clients to speak to the financial planner. The reason is I'm doing my due diligence because your financial position is now changed with additional debt. And sometimes for certain banks, if you're cashing out more than $100,000 and you don't have like a pre-approval to support why you're cashing out the money, and simply saying it's an investment purpose is not good enough, and you do need a third-party financial advisor to support that cash out. Long story short, let me get to the point of this video. I had a couple 4 years ago. They refinanced their owner-occupied home to do some renovations to build a granny flat. They live in Cecil Hills, and yes, I have permission to disclose this because I'm not putting their names here. The property is worth 1.5, probably worth more in 2022. Now the loan back then in 2019 was $1,162,000. They cashed out $248,000 to do a granny flat. Now this is the part where we have to do our due diligence and recommend you to a third-party person to review whether your insurance is enough to carry your extra home loan repayments in case you lost your job or get injured. Now back then, the client said, I already have a financial planner and will consult them. But they also took the option of speaking to our financial planner, which we have a panel of financial planners, if in case their financial planner provided a much higher quote. So this is what happened last month. The client's wife, they found out bad news that she was diagnosed with breast cancer. I don't know what stage it is, but I know it's pretty critical and it has affected her working ability. They run a company, a self-employed company, tiles business. And luckily, thankfully, she took out insurance within her super and outside her super to cover her income. This is also known as mortgage protection, or it can also be known as income protection and trauma insurance. And just about 2 weeks ago, which is when they submitted the application about 4 months ago, when they assessed the whole scenario of this claim, she got a $400,000 payout under her trauma insurance. And right now she's getting $3,500 income protection, monthly benefits to cover her income that she should be getting without the breast cancer. Now again, this is not financial advice. I'm just saying you should listen to your mortgage broker when they do recommend you to speak to a financial planner. Because imagine if this person didn't get it. I mean, they'll go and insure their car, but they won't insure their body. Because that $400,000 helps to, pay the loan down, cover the chemo expenses, and cover additional expenses in running the business without her. And it's not expensive, and sometimes it's tax deductible. And so,